Now, if you're struggling with ICT and it is actually very difficult for you to learn all of the concepts in ICT, this is a very simple way that you can trade without having to learn the very complicated ICT strategies. This is also similar to ICT, but this is very beginner friendly. You can start applying this strategy starting today. Very, very simple. So we'll get right into it. So with this strategy, you want to use the London sessions indicator. Okay. You want to use the London session. This gray box here represents the London session. What you're going to do is you're going to go onto the 15 minutes time frame. You're going to use two time frames. You're going to use the 15 minutes chart, and you're also going to use the 1 minute chart. So you're going to use two time frames, 15 minutes and 1 minute for your entry. Okay, so this is the setup that I've drawn out for you. What you want to do is you want to wait for the first candle of the London session, the first one. Okay, so when that candle closes, mark its a high, okay, and mark its low like that. Okay, at the wicks, not at the body, right? I've drawn it like this because this does not have wicks, right? But you want to mark the low and the high of that first candle of the London session. Okay, after you've marked that, you want to wait for price to close above. Okay, any candle that closes above either that high or that low, that will determine the direction of how you want to trade for that day. It will determine your bias for that day. So if the market closes above, like this green candle closed above this blue line, which is the high of the first candle of the London session, you don't take a buy trade immediately. You wait for the market to do something like this, move up and come down and take out liquidity below the black candles low, which is this blue line. You want to wait for market to come back and close with one candle that closes below here. Then after that candle closes below this blue line here, you count 4 candles ahead, 4 candles ahead on the lower time frame, which is the 1 minute chart. Then on the fourth candle, you take your trade, put your stop loss at the low, previous low below, and then target a 1 to 5 risk to reward ratio. Okay, so that is the setup. I'm going to show you that now on the chart. I've already drawn in those lines because I didn't want to take a lot of time on the video. I've just illustrated. So this is the 15 minutes chart, as you guys can see, 15 minutes chart. So this is the first candle. This indicator you're seeing here is the sessions indicator. You can find it in indicators. This one, it draws this London session automatically. So this black candle is the first candle of the London session. What you do, you mark it's a high and it's a low. Okay, it's a high and it's low. So when any candle closes below or above, that will determine your direction for the day. So here you see that this black candle closed below this line. So what do? You go down to the 1 minute chart. So this is now the 1 minute chart. This is where you're going to look for your entries, guys. Right? You're going to look for, I'm going to show you how to get an entry for a sell here. Just give me a moment. So the next thing you need to do is you wait for, since it closed below, you wait for the market to go and sweep the liquidity above, okay, above that candle's high, which is this line here. Okay, so you wait for the market drops, and then look at this news candle goes up to sweep all the liquidity above here. This is the 1 minute chart, by the way. There's a lot of liquidity above here, so this candle goes up, sweeps all liquidity above, and then what you'll be waiting for is that candle to close above. Let's see. Let's go to that area. This candle closes above this line, which is the high of that candle, sweeping liquidity. And then now from this candle, you want to count 4 candles. Okay, you count 1, 2, 3, 4 candles. Okay, let me zoom in so that we can be able to trade better. Okay, so we count 1, 2, 3, 4 candles. On the 4th candle, the next candle is where you're going to place your sell. Okay, place your sell trade here, and your stop loss is going to be at the previous high. I told you that. Put your stop loss at that previous high and then you are going to target a 1 to 5 risk to reward ratio. So this is a 1 to 5. This is what you're going to target. You can move this forward and you wait for this trade to play out. This is on the current chart right now. This is on the current one. This trade is still playing out. As you can see, this is still playing out. May play out when the market opens again. So also I can show you the next example just to illustrate how this strategy works. It's very, very easy replacement for ICT concepts, which are sometimes very complicated for some beginners to use. But this one, you can start using it as a beginner trader who likes to trade ICT concepts. So here you see that the same thing happens, okay? The same thing happens. The market closes above on the 15 minutes chart. Let me take you there and you see that the market goes up, okay, and closes with this candle here. Let me zoom in so that you can see clearly, guys. You see this candle, it closes above this line, okay, before any candle closes below. This one closes above. So what you wait for is the market to come and sweep liquidity below this line here. So the market rises in London session and comes back down during the New York session to sweep liquidity below this line here. You can see here. So at that point, you go down to the 1 minute chart, okay? This is the 1 minute chart. You're waiting for price to come back below this line. Don't consider this close on the 1 minute chart. Just wait for the close on the higher time frame, okay? So this is where the market comes and sweeps liquidity, just here, okay? So the candle that closes, let's go back to the 15 minutes. You see this black candle here closes below. So this, when this happens, don't consider this because this one, it was just a week, you can see here. So you come here and look for entries here on the 1 minute chart. So on the 1 minute chart, the candle that closes below will be this one here, okay? Let me zoom in so that you guys can see clearly. I want you guys to look at this strategy, how good it is. It's very simple. Anyone can use it. So you see this candle closes below this line as a liquidity grabbing candle. It's the first candle towards the liquidity grab. So you count from that candle's close, you count 4 candles. You count 1, 2, 3, 4 candles. After this candle closes, you place your buy trade immediately because here you are looking at buys, okay? Place your buy trade at that candle's close down here, which would be a really, really good entry. It would be a sniper entry, okay? So where do you put your stop loss? You look to the left and look at the most recent low on the left hand side, okay? The recent low on the left hand side is this area here, okay? This is the recent low down here. Let me show you that area. So this is the low here before the price went up. This is the low. So that is where you put your stop loss. You stop loss at that low, just a few pips below, and then you're looking for a 1:5 risk to reward ratio. This would even go beyond 1:5, but with this strategy, you're just aiming at a 1:5 for you to get your entries like here, all right? So with this example, we see the same thing. The market breaks and closes above. You can see here, it closes above, and then we wait for the market to come back and sweep liquidity below this candle's low here. So market comes back and sweeps liquidity here. This is the candle that sweeps, starts this liquidity sweep, this black one here. So we go down to the 1 minute chart, and then we go to that area there, okay? So we can see that after the close of that candle, it comes back to sweep liquidity down here, okay? So we look for the candle that closed below, the candle that closed below, right? The first candle that closed below, and that candle is this candle here. Let me just zoom in. It's this black candle here, okay? This one. So we count 4 candles from this black candle. Count 1, 2, 3, 4. This is the 4th candle here. So we take a buy trade after the close of this 4th candle here, okay? We take a buy trade here. And where do we put our stop loss? Our stop loss, we look to the left, and look for the lowest point below all this, because you can't put your stop loss up here. It is above the entry price. You look for the lowest point below the entry price on the left. So which is that place? Okay, which is that place? This is the low here. Okay, that would be the lowest point here below the entry, that blue line. Okay, so that's where you put your stop loss. Your stop loss just below that blue line, and then you will target a 1:5. Okay, I hope you guys are seeing this. So you're looking for a 1:5 risk to reward ratio trade here. So you can see that this trade goes up to 1:5. So guys, that is the simplest trading strategy using ICT without the complicated ICT stuff. This is my own variation of ICT that you guys can use to become profitable. It is easier to trade like this than looking for the ICT concepts like turtle soup, what, order block, and all that. This is the easiest ICT strategy you can use to become a heavily or more profitable trader. If you like the video, subscribe, comment down below with your questions, your suggestions. You want to add on to this, comment down below. Thank you guys for watching. Till next time, peace and out.